Big news from MGM Resorts before the market opened today. This is actually one of my biggest holdings today. And one of the reasons is I think there's a lot of optionality for MGM Resorts. It's not just about growth in Las Vegas and the regional casinos. It's actually about online gaming, which is kind of a free option with MGM Resorts. Because they own 50% of BetMGM with Entain, they also own an international business, which is an iGaming business as well. We didn't get those results today, but we did get results from BetMGM. They were really good. And there's actually going to be cash coming from that business back to the parent company in 2025. So really interesting development. That's not what they were expecting coming into the year. And I think this just provides even more upside. And when you look at the upside potential, not only in online gaming, but in the Japan resort that's going to open in 2030, I think the optionality, the asymmetric potential for MGM is just phenomenal today. But I'm going to dig into what we learned from BetMGM because this was the big development of the day. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So the market reacted pretty positively to this. Shares are up almost 4% as I'm recording. But this is the update today. Came out this morning, and you can see what they're expecting from BetMGM. And this is BetMGM reporting this. This is not MGM Resorts. So MGM Resorts owns 50% of BetMGM with Entain. So there's a little bit of a relationship there, but it is kind of a separate company. But I'll get to some of those distinctions in just a second and how this is really going to impact the parent company. But the Q3 performance is what they reported. Net revenue was up 23% year over year to $667 million. iGaming net revenue was up 21% and online sports revenue was up 36%. So iGaming is going to be basically casino games or slot machines, things like that people are going to be playing on mobile devices. Sports betting is just going to be typical sports betting. So the real momentum is in online sports right now. But the big thing, EBITDA, earnings before interest, taxes, depreciation, and amortization. So this is a proxy for cash flow, was up $57 million year over year. And for the year, they now expect $2.75 billion in revenue and EBITDA of approximately $200 million. Let's look at how this compares to February 4th, 2025. So about 8 months ago, when they gave guidance for the full year, they were expecting revenue of $2.4 to $2.5 billion. Said that eventually they could get to $500 million in EBITDA, but they only expected to be EBITDA positive in 2025. So they were seeing a bright future, but saying, you know what, wait, this year we're just going to get to kind of break even, maybe some positive cash coming in the door. But don't set those expectations too high. This was the big change, was the increased not only revenue, but EBITDA to $200 million. And they said they have enough cash on the balance sheet to pay at least $200 million to the parent company. So $100 million would be going to MGM Resorts in 2025. So just think about the value of $100 million potentially growing long-term coming to MGM Resorts. That value alone is worth, I'd say, at least $1 billion. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Then you look at the fact that MGM Resorts has a market cap of just $9 billion. And the EBITDA for the company as a whole, right now, this is Q2 2025, trailing 12 months, over $5 billion. So that's going to allow MGM to do things like build the Japan resort, build out their casino in New York, if that passes, and then also do something like buy back shares. And this is really what they've been spending a lot of their cash on over the past few years, reducing the share count by 45%. When the stock is this cheap, and depending on how you calculate it, management has said that the stock is trading for 3 or 4 times the cash that they're generating when you take out the value of BetMGM and also the Macau operations, which are also publicly traded. So this is a great value stock and operations are getting better. So investors are really thinking that operations are going to struggle. Obviously, that's why the stock has not really gone anywhere for quite a while. But management is buying back stock. We're seeing growth in online gaming, and we're still a few years away from that Japan resort opening. But don't discount the impact of that. That one casino alone could be the most profitable resort and casino in the world when it opens. I think $2 billion in EBITDA or cash coming from that resort. And MGM is going to own over 40% of it. I think it's 44% is what their current stake would be in that resort. So I think there's still huge upside for MGM Resorts. You get a nice combination of value and optionality for growth as investors. That's exactly what I want from an asymmetric investment. But let me know what you think about MGM's update today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.